Hello again, everyone. Welcome back and Happy New Year to everyone. And here's to a healthy and very prosperous 2022. In this technical analysis of the stock market video, I call it final gyrations because I think we're eking out the last moves of this final fifth wave up from March of 2020. Well, what I've got on the screen is a monthly chart. So what you're seeing here is a long-term view of the Dow Industrials. We're sitting at the top of the mountain at 36,338.30 with the close at the end of the year on the 31st. So we've had quite a bit of a move, but I also believe that there's a pretty good high probability that we are in the final throes here of this fifth intermediate wave, the fifth primary wave and the fifth cycle wave, et cetera, et cetera. It just all builds upon itself. And you can see what we're talking about. This trend line actually goes back. This one is the trend line coming off of 1982, this final move up. The fifth cycle wave up from 1982. I have 5 primary waves in here. We had third wave peak in January of 2000. Big sideways move here for wave 4, very similar to what happened in the late 50s. And then we've got these final 5 waves up from March of 2009. Okay, that is the long-term picture. You can see the major divergence that we've got from that high that was achieved in January 2018 to the peak on the RSI actually occurred right here, August of last year. All right, let's take a look at weekly view. So I am going to do a quick rundown of all the major indices. This is the beginning of the month, beginning of the year, so we're just going to do a quick snapshot and talk about all of them. I'm going to show you a couple of interesting tweets I came across last week, and then I want to talk about precious metals, gold and silver. Okay, so here's the weekly view of the Dow Industrials. Now, this particular wave structure I've got, or wave count that I've got in here, shows that we are, see, I'm on the orange scenario. This is an ending diagonal pattern. And let me go to the daily view and show you what I'm talking about. Let me move over here. I've got this as a wave 5 ending diagonal pattern. Here's the 5th wave. If this is an ending diagonal, which is the way it looks like it's playing out right now, then we're going to have a series of zigzags. Zigzag, zigzag, zigzag up, wave 3, 4, and 5. Now, this is the pattern that happens on a wave 5, on an ending diagonal wave 5. And if this is an ending diagonal, then we have wave 3 shorter than wave 1, wave 4 shorter than wave 2, and wave 5, the minute wave 5 will be shorter than wave 3. So it's a compressing type of triangle, contracting, almost like a wedge type of pattern here for wave 5. Now, there is another possible pattern with this that could be playing out, which is also an ending diagonal, but an expanding ending diagonal pattern. Now, this particular count has wave 3 ending over here in May and wave 4 finishing here in June. Now, the thing I like about this count is you notice how deeply oversold you got at wave 2 right here in October of 2020. You got even more oversold here at this low in June of last year. So I like that kind of fits in terms of the extreme sell-offs that we had. Now, we had a couple pretty extreme sell-offs here, wave 2 and wave 4 per this count. Now, in this particular situation, if this is an expanding ending diagonal, you still have a series of zigzags. But in this case, instead of wave 3 being shorter than wave 1, it'll be longer than wave 1. Wave 4 will be longer than wave 2. And so far, we're getting that checked, okay? But if that's the case, then wave 5 needs to be longer than wave 3. So that's what we're watching right now. You know, in the stock market, there is no such thing as certainty. So what you're trying to do is deal with a whole lot of uncertainty and figure out what is the highest probability in terms of the way things are unfolding And that's why we're looking at the wave structure and monitoring, just exactly what is happening. Is it this pattern? Is it the expanding pattern? What's going on? All right, let's go back, and I'm going to go back to the weekly view, and I want to go to the S&P 500. Okay, here's the S&P 500 weekly view. It was up 40 points for this last week. Kind of gave it back, quite a bit back. Now, this is the most compressed week when you look at the range, the high to low of this week, the most compressed of the last 6 weeks in here. So you have to go back to November, mid-November to get a week that was more compressed than what we just had. The last week of the year, volume's pretty low, and I'm not sure you can trust a lot of, things. I mean, things get whipped around quite a bit. So we'll see how things play out here, getting back to business with the first week of the year. Notice how we got quite a bit of divergence showing up here on the RSI in these final wave structures. So this is a weekly view. Let's go to the daily view. And right now, I am counting this fifth wave as an impulse wave. So a little bit different than what I've got for the Dow, but this could also morph into something else. This could morph into an ending diagonal pattern. We're just going to have to watch and see. Right now, it's been a little bit stronger, than the way the Dow has been playing out. But this is right now a path forward. These are not, when I show you waves out here, unless I specifically say I'm thinking it's going to go to X, these are just a path forward, okay? It's just placeholders that I've got out here. This is what I'm expecting. This should be, if this is an impulsive wave, then this should be a 5-wave move, a clean, non-overlapping 5-wave move. All right, so that is the S&P 500. Let's take a look at the Nasdaq Composite. Okay, the Nasdaq Composite, a little different. I've got this with the all-time high the week of November 21st. It's been holding it, and tell you what, this has been very, very weak. You can look at a lot of indicators. You can look at the new high lows. You can look at the percent of stocks above their 200-day moving average, et cetera, et cetera. Everything you look at related to the NASDAQ shows nothing but weakness underneath the surface. So right now, this is the way I'm counting it. I'm counting it. We're working our way down with a first 5-wave move. And it looks to me like we have wave 3, minute wave 3 is the way I've got it labeled, is underway. Notice how on Friday, this last Friday here, we closed below the trading of the previous 4 days this last week. We closed basically almost on the low of the week. So that's the picture we've got on the Nasdaq Composite. Let's take a look at the Russell 2000 ETF, IWM. A similar type picture on the Russell 2000 to what I just showed you on the Nasdaq Composite. And I think we're working our way down. I've got this labeled as minor wave 1 and 2 and 3. This is the path forward here for wave 3 to the downside. So this is the way I believe this is unfolding. We had this big sideways move that labels best as a big sideways triangle. Then we got this short 5th wave move to the upside, and then very hard 4-week move down that ended at the end of November into December. And we've kind of been a little bit choppy with this wave 2 pullback, but this looks to me like what's going on. You can see how this trend line in here connecting the low of wave 2 and the end of wave 4 right here was broken very substantially in November. And we have stayed down below it and been a lot of weakness. So I expect this weakness to continue. All right, I want to show you a couple of tweets right now. This is a really interesting, let's see, where is it? Let me get it right here. Okay, I came across an article in Bloomberg. Some of you may have seen this. It's gotten a lot of publicity out there, after it hit Bloomberg on the 27th, which I believe that was Monday. It talked about this guy, Doug Ramsey, and he is a chief investment officer for a firm that is, I'll show you the article in a second. What he's talking about is he's saying this statistic where we have the S&P 500 at an all-time high, and we have the stocks hitting their 52-week low, more than double those hitting a 52-week high. And that's an interesting little thing he came across. And here's the article. Here's what they're talking about. This has only happened 3 other times in history, all of them in December of 1999. And that's pretty interesting. But he also says when you look at even just like a moving average, a 6-week moving average of this situation, where you had the S&P 500 at a 1-year high, and you had the 6-month, similar type situation with the 6-week moving average. That was in July of 2015, and that was a pretty vicious correction that happened in July, August into September of 2015. And actually that whole correction kind of chopped sideways even into 2016. But that was a pretty vicious move down in August and September of 2015. All right, so pretty interesting article. I tweeted about that on Monday. And then the other one I came across is this one. And let me see if I can pull it up here. Here we go. Peter tweeted about this on December 29th, and he was talking about margin debt and U.S. margin debt and how it's been growing at the fastest pace on record. And what is he charting? He's charting the percent change over 9 months. And you can see what happened in the dot-com period right up here, which looks like it was right around the beginning of 2000. And then right here at about the 2007 peak. And the shaded areas is what showing recession, what was happening. And then here we are. We had the pandemic issue, and here's where we're sitting. So a pretty extreme margin debt, and this is not a very good sign when you see that. All right, so interesting tweets I came across last week. Let's talk about gold and silver. Okay, to talk about gold and silver, we're going to look at GLD and SLV. GLD was up nicely on Friday, up $1.16, up $1.99 for the week. So right now, I'm looking at this as a big sideways triangle, wave 4, primary wave 4, and watching to see, do we take out this high? And that high is 174.67. And if we do, we could be off and running as a breakout out of this triangle. So that's what we're watching for right now. This is the longer term picture. This is how we've got it labeled. 1, 2, 3, 4, and then a 5th wave higher out of this. So we'll see if we get this. It's been very, very frustrating in here with gold and with silver. A little bit different picture though when you go over and take a look at SLV. Let me pull that up. A little bit different picture, but what I'm looking at is that I've got this as cycle wave, that we're in a cycle wave 3, and within cycle wave 3 I've got 1, 2, and 3. Okay, so this looks to me, and we've had a lot of just wild gyrations here ever since. Let's go back over here. When is this? August of 2020. Okay, that high, August of 2020. This looks like a 3-wave, 3-wave, and I believe we're doing 5 waves down. The real question I've gone on SLV is, did 5 waves finish here, or do we still have a little bit more frustration to come? And the reason why I've got a little bit of doubts in here is because the way I've got this labeled, the way it looks to me, is this looks like a C wave ending diagonal pattern. In a C wave of a zigzag like this, or even a flat, this is a flat, a C wave can be an impulse or it can be an ending diagonal. And given the way this has been gyrating around, this looks like an ending diagonal type pattern. It may have ended here, but I'm not getting a clear zigzag. That's why I'm on a little bit of alert for a possible failure of this move. So we could get a little bit of divergence between gold and silver. We'll see, but we're watching this. And I did draw this trend line across 2 and 4 because that's what I'm on alert for. Do we get a breakout and push up through this trend line in a strong manner? Okay, that's the picture for this weekend. We'll see how the month of January wants to go. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. If you'd like more of this kind of information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. All right, everyone, have a great week and a great January, and a great 2022.